are now in an amazing workshop called The Three Power Moves to Become Your Own Bank. What does it mean to become your own bank? To think like a bank when you look at your finances. How do banks handle their money so that their money does not go down to the line of zero? Do you know that the stock market crashed and the banks are not worried about it? Banks are not concerned about going into another Great Depression where they have to close their doors because their deposits have gone down to the line of zero. They have set up a system, a borrowing system, and a leveraging system where they never have to worry about not earning interest on their balance and going down to the line of zero. So, suppose you and I could set up those same systems. Well, I have discovered that there are three power moves to setting this system up for yourself. And you might be asking, well, who are you and what makes you an expert on this? Well, my name is Richelle Dickerson, and I'm the CEO of Rama Financial Solutions. We are a life insurance brokerage firm here in Virginia Beach, Virginia. Personally, I have been in the industry since 1992. Started out with just basic whole life insurance and graduated into the life insurance, annuities, and investment spaces. Hit the $1 million round table for the first time when I was 19 years old. Hit it over and over again, not even knowing what it was or what I was doing. Was flown all over the country and all over the world, actually, to islands and everywhere by the life insurance company, and didn't really realize how amazing I was in my early 20s and 30s. Long story short, going in the back room at the $1 million round table, I was sitting among people who were multimillionaires and I was barely struggling to make ends meet. Now, why is it that I'm number 7 in the entire country and I'm so broke? Why is it that they have a Mercedes and I'm in DC with a bus pass? What is the difference? What do they know that I don't know? Well, there was a lot. But one of the things I found out that they know was how to be their own bank using investment accounts, life insurance, and annuities. They knew things about trust funds and how to get paid tax free and different things that I didn't know. I got a little bit angry. And I'm going to be honest with you. I got angry because I'm thinking, why is this information segregated away from a certain population of people? Why is it segregated? Right? So I made up my mind to desegregate the banking information because we were redlined as African American people in the life insurance industry, which means the life insurance company gave us certain zip codes and they gave us certain products that were aimed towards poor African American people, while everyone else in the population got banking products. And they started putting their money into these banking products and earning shares of the life insurance company, where we were just being buried. We were paying too much for our life insurance and we were barely burying our people. And my community, my mama, my grandma hated life insurance. My grandmother put money into a policy for 40 years. And when she died, we only had $3,500 on that policy to bury her because we were sold the stuff that wasn't really any good, right? But that all made me very angry. Okay. So when I finally got a hold of this concept, I quit the industry. The industry kicked me in the behind, quite frankly, with chargebacks and just people having, really rough attitude towards what I was doing. Came back in the industry in 2020 during the pandemic. At the time, I was a full-time exercise rehab therapy specialist for seniors. Of course, during the pandemic, that all shut down and we were quarantined. I was going broke, spend up my 401k. My son and I were door dashing to try to make ends meet. So before we got put out of our apartment, I think they stopped, evicting people. But my car got snatched and all of that. So all of that, I asked God, what should I do with my life? Has anybody ever been there to the point where you were hurting so bad you dropped to your knees and said, Lord, are you up there? Can you help me? Right? Lo and behold, somebody from my church, if somebody from your church roll up the next day, God's listening, right? Somebody from my church said, Richelle, somebody from the dance ministry, I was on the dance ministry, said, Richelle, I got something for you. I said, okay. And then she didn't really know what it was. And she came on with her manager. And guess what she did? She showed me the life insurance industry, but she showed it to me from a be your own bank perspective. And I'm like, what in the world is this be your own bank? Tax-free retirement. What in the world is that? I didn't believe it. I thought it was a scam because I was programmed that life insurance is only to bury people. And I saw the mess that had been caused in the industry for years. So I did not believe it. But as I dug a little deeper, I learned that this concept has been around since the early 1980s is when it really peaked by E.F. Hutton. He invented it. So, I dug into the history and I just kept digging. Long story short, from 2020 to 2021, I earned the $1 Million Roundtable Ring earners again, had over 15 people, grew to 30 people in my organization. And in my organization, 2 millionaire downlines who were in the industry back with me in the 90s who had the same question. What is this be your own bank thing, Richelle? We know you, but what is this? So we began to grow together. So from that point to this point, I have been very, very passionate about the be your own bank concept. Long story short, in 2020, my son and I were living in a government subsidized apartment in Virginia. As you can see, if you see the background, this is a real background. This is not a Zoom background. I am sitting in a movie theater combination, my bedroom in my home. I also have an office downstairs. I have a 3-story, 6,000 square foot home. I've rescued my mother from a um, domestic harsh relationship. She has her own apartment with a jacuzzi tub and a waterfall shower right above me. You understand what I'm saying? And what I did was I took the life insurance and the annuity and investment, and I used it to be my own bank to buy this piece of property. We also had, the house is so big, we have another apartment attached to the house where there is a renter who helps pay the mortgage. Do you understand what I'm saying? So being your own bank has lifted me from absolute food stamp poverty all the way up to the upper middle class. I'm just being transparent with you. Within a short period of time, from 2020 all till right now, in about 5 years, my income has multiplied exponentially. And I'm not bragging because if I can do it, you can do it. God has no respecter of person. All I did was wake up and apply the thinking and the principles of being my own bank to go from 0 to 6 figures to 250,000. My best week, my best day has been $43,000. That actually, I want to say my best, maybe 2 to 3 hours has been $43,000. And my clients today, I also still teach seniors because I love seniors. So I still do, boots on the ground and little line dance here and there. So today at our senior facility, we had a little brunch, and one of my yoga slash Pilates students She was sitting with her group of Caucasian 70-year-old friends, and I was sitting with my mother and some African American senior ladies, and we were and she was across the room, and she turned around and looked at me, and she told her friends, Richelle is making me rich. I was like, what? Instead of losing her money on the stock market like everybody else, she's telling everybody, pointing to me. And there's like, but doesn't she teach Pilates? Doesn't she teach line dance? Like, she's making me rich right now. Okay. So being your own bank has saved my money from the stock market crash this year. Mine, my sons, my mom's, our agents, our clients. Miss Maggie's on here. Her money, I don't know. Maybe she'll tell you, maybe she won't, right? So everybody who's connected to me, our money is growing. It's I can show it, make sure it's tax free, right? And off of the matrix. Our money is out of the matrix. Okay. So that's what I have to offer you. That's what we're going to talk about today. All right. So that is all in my bio right there. I kind of broke it down from my heart with you. So the next step is, what do I want out of this? Yeah, everybody wants something out of this, right? Well, I have good news for you. Nothing is for sale. Nothing. Even if you decide that you want to work with me one-on-one, nothing is for sale. We do not charge financial advisors fees. Most financial advisors charge you fees for the rest of your life, which means if you open up a brokerage account, you will notice that there are fees, commission fees attached to those accounts. They're either 1% to 2%, and they last for the rest of your life. And even when you lose money on the stock market, those fees are charged. So the brokerage house, they make money whether you make money or not. We found that this isolates a large group of the people out of and causes financial literacy. So we found a way around that. If you decide that there's holes in what you're doing financially and you'd like to talk with me one-on-one, if we connect and you decide that you want me to be your broker, I'm going to ask you for referrals instead of a broker fee. 10 referrals, one time. Who do you know that I should know? Of course, I'm asking for your best referrals. People have referred me to their pastors, to their employers. They've opened up doors so that I can do group presentations. So 10 of your best referrals, and there's no coaching fee. Now, listen, I have people texting and calling me, asking me what they should do all day long. You have access to me and without a fee. All right. So now we can get that off the table, right? So there's nothing for sale here. Here's another transparent slide. These are the companies that we broker for: National Life Group, Emeritus, Foresters, Equity Trust, Mutual Trust, American Equity. You'll see some equity companies and you'll see some life insurance companies on here. The common thing is you'll see they're all A rated. An A rating means that you have excellent customer services, you pay your claims on time, and you have multiple billions of dollars of assets and surplus cash, at least $10 billion in surplus cash. You have to have a combination of all of those to get an A rating from AM Best and Standard & Poor's. We do not, I repeat, do not broker for companies that don't have an A rating. We don't mess with them. Why? I told you, I've been in the industry since 1992. So we have worked for B-rated companies, and they took our book of business and closed the doors in our faces and gave people a hard time paying their claims, paying their annuities, all kinds of stuff. Because when you don't have good customer service and surplus cash, you give people a hard time. So we don't want them. Okay. And you shouldn't either. All right. So there it is, nice and transparent. All right. So we're talking about being your own bank. Being your own bank is a mindset. So, first thing we have to do is identify our own personal mindset. And here's what I discovered about myself and discovered about others. There's three mindsets. There's the mindset of the investor. This is the person who's always looking for a place to multiply their money. They have an abundance mindset. When I put my money here, I do not put my money into things that are cheap because it breaks. Okay. You get what you pay for. Quality, right? So when I put my money into something, it's got to multiply for me. The investor mindset says I must have my money must go to work for me at least two times. I need to see two times the return, two times the benefit. I need to see it working for me two times, or I'm not going to put my money there. Right? So the investor's always looking for growth, passive income, or a benefit that is greater, two times greater than the money released. There's a biblical principle behind it. Jesus told the story, the parable of the sower. He said that the master had three servants. One hid his talent in the ground. Y'all remember that? Those of you who know the Bible, and didn't get any return on it. One multiplied it 30, 60, and 100-fold. And the one who didn't get a return, the Lord said, "You wicked servant." I didn't say it, okay? I would never call anybody wicked. Okay, he can do that. I can't do that. You should have put my money through the exchangers. You should be multiplying, finding a way to increase, to grow what it is God gave you, right? So that is the mindset of the investor. The mindset of the saver is good, but you have to be careful because it couldn't be a hoarding mindset as well. But the mindset of the saver is putting money away, out of sight, out of mind, saving for an emergency. The Bible principle here is in the book of Proverbs. Go to the ant, you sluggard. Consider her ways. Say, you lazy person. Consider how the ant works in the summertime and sets aside her money and her provision so that when the winter time is here, she's living off her provisions. So there is the principle of the saver. But we have to be careful that we're not fearful to release the money and to bless others and all of that. We recommend that you have at least 6 months worth of emergency funds set aside in a money market account or a high yield savings account, out of sight, out of mind. No debit card, but it's there if your house burns down or you have an emergency and you have to go to the emergency room, or you have to get a quick hotel because there was a large tornado or something, right? No more than a year's worth of saving, because banks do not pay enough interest and your money will decrease in value at the bank. But the mindset of the saver is a foundation for being your own bank. The mindset of the spender is where I was. That's why, even though I did make six figures, I was broke, because I make six figures and I would spend six figures. I already had every color pair of shoes. I had to have the new shoes, right? Going to the cash register and swiping your card and you didn't even check your balance and being all embarrassed, right? So the mindset of the spender is the mindset of just wishing and hoping and not being financially aware, right? So identifying your mind and where you are, and then making that turn that you are going to be a saver, set aside money out of sight, out of mind, like the Bible says, and making sure you have emergency funds. And you're going to be an investor, which means you're going to make sure that every dollar has babies. You want your money to be making babies, money babies, earning at least 2 times what you have put in there. The shopper is what most women are. There's some men that are like that too, but I don't know what it is about us as females. We just shop, 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 right? Drive our spouses up the wall, right? So we have to set up systems that counter that. And that's how I got myself out of it. I noticed I had bad money habits, a bad relationship with money. I heard Bible principles that money is the root of all evil. And if you think that, what are you going to do? Try to get rid of the money, right? So I had a lot to overcome internally, but setting up the tithe system to myself, where I take 10% of every dime I earn and set it in a money market account, automate it, don't look at the balance as a lifestyle. That is one of the things that broke the curse of poverty off of my life. The mindset of the spender is the one where your bank balance is always going down to the line of zero. So this is spending and then saving and then spending all your money up on something and then having to work, labor to get that money back, and then living that and doing that over and over again, or charging up your credit card and then maxing it out and then putting it back over again. So Richelle, how do you break this? Leverage. The idea of leveraging other people's money, leveraging and being paid money on your money. And we're going to get there. But here is one principle that I want to challenge you. And that is, if you recognize yourself as a spender, practice Proverbs 6 and 6 through 11. Take $200 a month, automate it out of your pay, and set it aside in something called a no money account. That means if somebody asks you, do you have any money? You say, I have no money. If you ask you, can I get that $60 dinner or that $50 purse? I have no money, right? Now, I'm not saying neglect self-care, because you do need to get your hair cut and done and all of that. But the extras, trimming it on down. So if you have less than 6 months worth of savings, you cannot afford to put yourself out there. You should have a minimum of $6,000. That's $2,000 a month worth of expenses. 6,000 is 3 months worth of savings, bare bone minimum, growing at 3 to 5% interest in an accessible cash account somewhere. That's the foundation. All right, so I gave you a promise. I said that I was going to show you those 3 power moves, right? I'm coming to it. Stick in there with me, okay? Just like you do at church, I'm coming to it. Okay. Is your account like a bucket with holes in it? The holes in your bucket are taxes. Taxes are going to take 22 to 39% out of your checking, out of your check, out of your savings for federal taxes, and 3 to 13% in state taxes when you add it all up. And then there's early out penalties on retirement plans. So if you add it all up, Uncle Sam's going to get a bare bones minimum of 30% of your money in taxes. It's a huge hole. Brokers' fees, we talked about that. Brokers will attach a 1 to 2% fee onto your account, or they'll ask you to pay them $5, $10, $15, $20, $30,000 up front before they teach you the market or do any investing for you, help you invest. Then there's low growth, putting your money in a savings account at the bank. If inflation is running at 5%, which means the cost of living is increasing at 5%, and your money is only growing at 3%, that means that your money is depreciating in value by 2% every single year. If your money is only growing at 1%, your money is decreasing in value by 4% every year. Example, let's just say I went to the dollar store and bought these glasses. Of course, I didn't get them from the dollar store. We don't do cheap. But let's say these glasses cost $1 at the Dollar General, right? Next summer, I went back and bought these glasses and they cost $1.05. So if I don't have an extra 5 cents, I can't buy these glasses, right? So now my money has depreciated in value. My dollar doesn't have the same buying power, right? So if my dollar didn't increase by 5 cents sitting in the bank, my money has depreciated in value. You with me on that? So low growth deteriorates your money unconsciously. Now, you all know that we work predominantly with Black people, right? So my grandfather used to bury his money in the house. It's probably still there and the house is gone. You know what I'm saying? We used to put the money in a cookie jar. Guess what? Those dollars decrease in value. Don't do it. The stock market crashing. The stock market lost over $10 trillion over the past several months. People have lost hundreds of thousands of dollars. Those who have to retire this year are in pain. Many of them are 60, 65 years old, 70 years old, and they're saying, I can't leave because I don't have enough money. I lost $100,000 in my 401k. Now I cannot afford to retire. It is sad when you work for 20, 30 years to save money and you see 10, 15, 20 years worth of savings gone in 4 months. It's sad. Okay. There's 3 places to put your money: your job, the bank, and private industry sources. Putting your money in the bank depreciates your money in value. You have your taxes that eat it up. You have your low growth and you have your fees. Putting your money in a 401k, we call this a tax trap because as soon as you need your money, you are going to have to pay back taxes. You are giving your money to your employer and the IRS as a promissory note that you'll pay your taxes when you retire. So you're deferring your taxes until you retire. So when you retire, you're going to have to pay the piper. 30 to 50% of taxes, fees, and stock market gains will be stock market losses will be gone from your 401k. What's a better place to put your money? Private industry sources. These are life insurance companies, self-directed IRAs, self-directed Roth IRAs, and trust wrappings. These are the tax-free buckets. Roth conversions. If you don't know what a Roth is, write it down, look it up. In simple terms, you have to keep it for 5 years and you have to be 59 and a half years old and the money comes out tax-free. That's a traditional Roth. There is a private Roth that rich people use combining a trust, and we'll get to that Roth later. There's the rich man's Roth, where people use life insurance policies and liquidate them. And it's called a rich man's Roth because it has no limit and it has no penalties for withdrawing money. The only penalty is the cost of life insurance. After that, the rest of the money is yours. So over here is where the wealthy live, in the tax-free zone. But guess what? You don't have to be wealthy. You just have to be knowledgeable and to have somebody that you trust that you can work with to get your money off the matrix. OJ did it when he was sued by the Goldman family. He went to jail, and Forbes magazine reported that he was earning $600,000 a year passive income, and the Goldman family couldn't touch it. When he came out of jail, he came out financially independent. He had socked away $6 million into trust annuities and took his NFL money, converted those 401ks and all of that, got his money out of the matrix, set himself up for life. Now OJ has died. And guess what? The Goldman family still cannot touch his money. It went straight to his beneficiaries for the rest of their life. And when they die and have children, it'll go on and on and on. If OJ can do it, you and I can do it. No, you don't need $6 million. You need wisdom and about as much as you would pay a 1-month mortgage, and you can set yourself up to be your own bank. How do banks operate? Banks use other people's money to make money. So let's just say Miss Maggie set $100,000 in her savings account at the bank. Okay. And then she didn't need it. She just let it go, just let it sit there. And I came in and I wanted to take out $100,000 loan. Maybe I'm starting a business. So I go and I apply for the loan. They'll check my credit. Let's just say I have a 650. So they're going to charge me 12% interest on $100,000. They're going to take Miss Maggie's money and they're going to loan it to me and charge me a 12% interest on her money. Then I will pay them back 100,000 plus 12%. And then let's say James comes in and he does the same thing, and they'll charge interest, and then James will pay back Miss Maggie's money. So they will use Miss Maggie's money 10 times with 10 different people and charge 10 different interest rates. By law, they can use one account 10 different times. So did the bank give you their money? They did not. The bank never uses their own money. They only use the money from the depositors, and they charge interest on our money. That is the thinking of the banker. So, an example for you and I, you buy a house. Your house is worth $500,000. You're going to take out a what? Loan, a mortgage. And hopefully you're not charges huge interest, right? So if you take out this $500,000 mortgage and you're paying it, how would you use that and be in your own bank? You would get somebody else to pay the mortgage, and you would charge, like the Bible says, 30% more. You would make money off of that mortgage, hopefully 30%. And if you have an investor's mindset, how much would you make? 50% or more. So if you are an investor and you have a renter, you're making 50% on that $500,000 mortgage over what you have to pay. So you have a renter. That is the be your own bank mindset. Amen. All right. If you took out a car loan, same thing. You rent out that Mercedes Benz and the renters pay the mortgage. If you have a life insurance policy, you borrow the life insurance company's money and earn interest from the dividends because you earn shares. The life insurance company is paying you shares. So your money stays in the policy and keeps growing, and you use their money to do whatever it is you're going to do, right? So you get free money if you earn more interest than they're charging you on the loan. Now, you may have got that. Some of it might have went over your head. I don't know. But the first power move is knowing how to leverage a loan. If you are a business person, this is you borrowing. You have $0, but you need $1 million. So you have a business plan, you go to an investor or you go to the bank, and now you walked in broke, but you walk out with $1 million in loan. You pay back the bank $20,000 in interest, and you pocket whatever it is you made above the loan. So the first power move to building wealth and being your own bank is knowing how to leverage a loan. E.F. Hutton taught this concept back in the 1970s. And he created a life insurance policy that goes with this mindset. It is called an indexed universal life insurance policy. The index means that you have indexes, which are mutual funds inside of the policy. But the uniqueness of this is when the market crashes, your money sits on the floor of a guaranteed interest rate and you don't lose a dime. As a matter of fact, some of the accounts that we have, you'll earn 1% or 2%, even when the market crashes. When the market goes up, you'll earn uncapped interest in the policy. Rich people were stuffing millions of dollars in these policies when E.F. Hutton first created it. So the IRS came up with a code, said, nope, we're not going to let you stuff all that money out in there and not pay taxes. So you have to have a minimum amount of life insurance now in order to create this Roth account. It is buy permanent life insurance and invest the difference in a fixed indexed Roth IRA. It is counter to A.L. Williams. A.L. Williams created buy term and invest the difference. And people who were not financially literate lost their money on the stock market. And people who got sick in their 60s, high blood and diabetes, overweight, cancer, different things like that, when it came to renew their term policies, they were uninsurable, or the prices were so high they had no life insurance, thereby sending them into the final expense life insurance market, which is very expensive, $200 a month for a $10,000, $15,000 policy, right? It's a racket. It's all rigged, right? So buy term and invest the difference did not work for those who were financially illiterate and or got sick and still didn't have adequate assets in life insurance. Amen. Okay. That was a lot. Get the recording and see if you can figure it out. One of the most famous people to use a life insurance policy to be your own bank is Walt Disney. Walt Disney, if you go to, I want to say Paramount has a documentary. You may even find it on Roku, the Roku channel. It's a Disney documentary. And it's a Disney movie. It's a movie about his life. And you will find that Disney bought a $2 million, $2.5 million participating whole life policy. That is a policy where you own a piece of the rock or you own a piece of the life insurance company. The life insurance company gives you shares when you buy a policy. So you'll get a dividend statement, right? So he bought this $2 million policy, I want to say in the 40s, because he just got married. His wife just had a baby, had a mortgage. There you go, right? So in the 50s, Disney wanted to open up Disneyland in California, but the banks would not loan him the money because in the 50s, amusement parks were considered ratchet. That's where the bearded lady, the scammers who sold snake oil and passed it as some kind of healing toxic, thing. It was just not a place where the banks wanted to be involved. So he got no's. Then he realized he had a life insurance policy that had over $100,000 in cash. He borrowed $100,000 from his life insurance. Notice that his cash value kept growing. So when you're using their money, your money still stays in the policy and it keeps growing. He took the $100,000, paid for the land in California, When Disney opened, it net over $2 million. So he paid back his $100,000 to his life insurance policy at 3% fixed interest. And then he profited millions of dollars. So he learned that it was a self-structured loan. He could pay it back when he wanted to. If he didn't pay it back, they would decrease it from his life insurance at the end of the year. So he used his death benefit as collateral for the loan. So he just rinsed and repeat. So he is one of the strongest, wealthiest, most famous people to use a life insurance policy to be his own bank. I do it. I've been doing it since the beginning of the pandemic. I did it to purchase this property. I've done it when I've had emergencies and had to get rid of emergencies, things that came up, and paid myself back. My mother does it. She's in her 80s. My son does it. He's 17. And we are practicing this principle. And I want to say to you that it works and it will strengthen your personal economy. So, leveraging life insurance loans. Here's an example of an index universal life on a 60-year-old woman. She had $200,000 in the bank and she said, Richelle, I want to leave my grandchildren an inheritance. I do not want to leave it in the bank because when I die, the bank's going to freeze my account. The bill collectors and the tax man is going to attack my account and with 40% death taxes and probate. So I want to take my money out of the bank and I want to leave my children, my grandchildren, money. As the Bible says, a good person leaves an inheritance to their children's children. Not only that, Richelle, I understand that you can turn this into a tax-free retirement income. So another $1,000 a month extra retirement income is going to help me travel and live a more comfortable life. And I said, yes, ma'am. Here's what we can do. We'll take a lump sum $200,000 one time. Take it from your bank. We'll make sure we leave back 1 year's worth of savings for emergencies in your bank. That's going to turn into $588,704 worth of life insurance. You said you can leave it alone for 5 years. And at the end of 5 years, it will be paid. It will endow. And at the end of 5 years, it's going to pay you $1,200 a month. You'll be 65 years old, and it'll pay you that for the rest of your life, tax-free. As you're being paid this money every single month, your cash value will continue to grow. So your cash value at age 69 will be $72,000, then $144,000, $215,000, up to $288,000. Guess what? You've gotten your money back plus usury, as the Bible says. You got an extra $88,000 of tax-free cash that you can borrow or withdraw out of this policy. And if that wasn't all, guess what? You can leverage the death benefit if the doctor told you you were terminally ill or needed long-term care, critically ill, which is cancer, heart attack, heart disease, stroke, kidney disease, or you were critically injured, head trauma, severely burned, paralyzed, or in a coma. You could call up the life insurance company. You can file a claim against the $588,000 death benefit, surrender a portion of the death benefit, and take $389,000 in cash and leave about $200,000 back as a death benefit if you so choose. The most beautiful policy I'd ever seen in my entire life. Couldn't believe that it existed. I found this policy in 2020. It had been right under my nose for at least 10 years, and I had not really seen it until I learned the concept of being my own bank. And I took out $1 million for myself, 100,000 for my son, and over 50,000 for my mom. And every single year we use it just like this to be our own banks, me and my family. Here's a couple that decided they didn't want to keep putting money in their 401k because they were tired of seeing the losses. and they knew they were going to have to pay 30% to 40% in taxes. So they redirected $1,500 a month into an IUL. And guess what? If one of them died, the other one would be a millionaire instantly. At age 64, they can stop putting money into it and it'll start paying them $5,122 a month, tax-free lifetime income. And just like my other client, while they're taking their income, their cash value is growing 300,000. It goes all the way back up to $1,200,000 in cash value as they're taking their income at age 64. Amazing. And then they can file a living benefits claim against it if they were diagnosed with something critical, chronic, or terminal. Amazing. I love this policy. Okay, that's great. Guess what? If you are a high earner, there's something that you can do that other people cannot do. There's something called premium financing. And this is what I learned in the back room at the $1 Million Roundtable. I learned that they were hiding this from the rest of the agents around the country and saving this just for people who make $250,000 a year or more. And I was mad because I was like, why? Right? It's called Kaizen. So that same index universal life insurance policy that you saw, same company, same everything. If you are in a position where you could drop $20,000 a year in, all you'd have to do is do that for 5 years. So if you do the math, this is a person dropping in 25,000. That's 50. That's 100. So this person dropped in a total of $125,000 worth of their own money. Kaizen is a trust. That's the name of a trust. This trust couples people with banks, and the bank will match your money dollar for dollar for 10 years. So here you can see this person dropped in 25,000 and the bank dropped in 25,000, and they did it for 5 years and then stopped. Then after 5 years, the bank put in the whole amount, 50,000. So it's a 5-year retirement plan. At the end of 5 years, they stop putting it in and turn on a lifetime income of $30,177 per year, tax-free for the rest of their life. They can choose to put in the end of 10 years, or they can choose to not touch it. And if they leave it in there longer, their income will be bigger. This is true leveraging, where you use the bank's money and just let it sit and cook, and you will double your income. Think about it. You can use the bank's money to buy a better house. You can use the bank's money to buy a better car and leverage it. Why can't you use the bank's money to bulk your retirement income? Well, you can, but it starts with a person who can do at least $25,000 a year and has standard health. It doesn't matter your age, it matters your health. Woo, that was a lot. All that was power move number 1? That was. Listen to power move number 2. This is amazing, okay? Power move number 1 was leveraging a life insurance policy. We looked at an index universal life. We looked at a participating whole life, also a high cash value whole life. And we looked at premium financing, where the bank will put money, match your money dollar for dollar, and then they will put in all of the money you would have put in for the next 5 years. And then you could just pull the lever on this huge pile of cash, and all you put in was 125,000, 150,000, and you can leverage $2 million, right? So that's huge leveraging. Here's leveraging number 2. It is getting something called a fixed index account. It's short for FIA. Fixed means you have a guaranteed interest rate. So when the stock market crashes, your money sits on the floor and you don't lose a dime. Index means you mirror mutual funds, the S&P 500, Russell 2000, Global Balance, Hang Seng, Bank of America funds. Just a bunch of them. Bank of America is not really a real index, but okay. But so this is having your cake and eating it too. Never losing a dime, but getting stock market gains. Okay. So being your own bank is using somebody else's money. How do you use somebody else's money? Well, if you have a fixed index account, there are life insurance companies and investment companies that will pay you a huge bonus. So if you put $200,000 in there, there are life insurance companies that will pay you $20,000 on top of your 200,000. What is the catch? You can't touch it for 1 year. So if you can leave your hands off of it for 1 year, you're going to get paid $20,000 plus the interest that you earn from the market and never lose a dime. That's a fixed index account. Now, the second thing is a fixed indexed annuity. Okay. A fixed indexed annuity means you take that lump sum and turn it into a lifetime stream of income. Okay. So when you run out, say you had $200,000 in there and you pulled out $20,000 a year, how long would it last you? 10 years? 10 years, you'd be broke. But suppose you live longer than 10 years. Do you want to be broke going down to the line of zero? No. So it allows you to pull out that $20,000 a year for the rest of your life. You're 80, you're 90, you're 100 years old. So now you're living off the life insurance company's money when your money has dried up. Okay. That is leveraging using somebody else's money while your money is gone, pretty much. Okay. Now, here's something we should have learned in elementary school. I don't know. I don't know if I'm going to teach this lesson. I think I'm going to skip it about the indexing. Okay, so this is a fixed index account. Two moves. The first move is the bonus account. You drop your money in there, you get paid a bonus. You let it cook for 1 year, you get paid an end of the year bonus. You take that lump sum that you grew, you take it from there and you put it into an annuity. The annuity is going to pay you out a lifetime income with an 8% roll up. This is about a 7% roll up the first year, 8% roll up if you leave it in there 2 years, and so on. So here, this person would have ran out of money at age 86, but they chose to take the lifetime income. So way after they ran out of money, they're still getting paid $47,617. They've locked in their lifestyle. They never have to worry about their basic expenses ever again. Okay. This is a millionaire who did the same thing. He was able to wait till he's 65. So he just rolled over $1 million. He got paid $136,000 bonus, let it cook, get all his end of the year bonus. And then at age 65, he took $171,941 locked in for the rest of his life. So he said, Richelle, I don't want to take this 1.3 million and stick it in the bank because that means debtors will come after me, taxes will come after me. It's on the public banking system. If somebody doesn't like me and sues me, they can go freeze my bank accounts like OJ and throw a black man in jail and all of that, right? No, that's not the way to go. Okay. So he made it safe. He got it out of the matrix. He is safe. Nobody can ever touch it. He can go to jail and come back. I won't wish that on him, but it would still be there, right? Because it's safe and it's out of the matrix. So power move number 2 is a fixed FIA, fixed index account or fixed index annuity, where you leverage a life insurance company as your own personal income, or you leverage the life insurance company's money to pay you a big bonus on your money. Let it cook for a year, earn other bonuses, earn interest from the stock market, and you never lose a dime because you get stock market gains and no losses. Okay, so we got your 2 power moves. I promised you 3. The first one was to leverage a life insurance policy. 3 different ways to do that. The second one was to leverage a fixed index account or fixed index annuity. Now, here's the Rockefeller move. This is the one I had to be in back rooms and pay. They only took people who have $250,000 in assets into the back room and told us this structure. What we learn is once you learn this structure, if you try to apply it on your own and walk in to a law firm after you've done these power moves, they're going to ask you if you have $1 million in assets, and then they may not even do it for you. We found law firms where you have to have at least 6 figures in assets and they will do it for you. Some law firms will gouge you. They'll price you out of the market and won't give you the opportunity. So that is the reason for partnering with us, people who already are connected with various different law firms and can point you in the right direction so that you're not being overcharged and you can do it effectively. This is the trust. Okay. So once it only works with one product, an annuity. There's no other product on planet Earth that this works with. Doesn't work with a life insurance policy, doesn't work with a mutual fund, CD, brokerage account. There's nothing else on the planet but an annuity. So why is it that people are telling you annuities are bad? Because they don't get paid commissions from the annuities. A stockbroker gets paid commissions when he invests your money on the stock market, and he gets paid his commissions whether you lose money or not, right? So an annuity doesn't pay that firm. So that is the reason why they don't do it for you. Okay, you. But once you have your money into an annuity, there is something called an annuity trust that can only be gotten through a estate planning lawyer. And there are some that we are affiliated with. When your money is inside of this trust, it becomes irrevocable, which means you cannot ever go back and change it throughout time. Once your money goes into the trust, you no longer own your annuity. Now your trust is the owner of the annuity, thus no taxes. And this particular annuity structure, the money will be paid to you as the guarantor. So you will get your guaranteed income. So you saw the $47,000 that was coming from that annuity. You saw the 171,000 that was coming from the other annuity. Now that annuity is placed inside of the annuity trust. It is made irrevocable. Now my clients get that 47,000, 171,000 for the rest of their life tax free. Listen to me carefully, because it is a trust and they're no longer the owner. It also goes to their children and their children's children, lifetime income tax free. Now, I'm going to tell you a story and then I'm going to close it out for questions. That is the way to fulfill what the Bible says, where you leave an inheritance to your children's children, but you're just taking your 401k, 403b, it has 6 figures in it, and you roll it into an annuity, and from the annuity into the trust. And now you've created generational wealth for yourself. You stabilize your income and you've created perpetual wealth for everybody who has your last name or whoever you've structured it for, right? This is truly the backdoor Roth. It is an untraditional Roth conversion. Okay. We do traditional Roth conversions. We have to pay your taxes one time up front, then roll it into a Roth. That is a traditional Roth. But going from there to the annuity to the trust, that is an untraditional. Wealthy people only knew about this until you got on this Zoom call move. Okay. There's the power move. All right. So what should you do after listening to this call? If you have a retirement account, you want to do what's called a green sheet appointment with me. Okay. You will first do a 30-minute talk. This is where we get together. We just talk. What can I do for you? Is there a connection? Do you feel like you can trust me? Do you feel like you like me? Do you want to see more? Right? Is there a connection? That's free 30 minutes. After we talk, you will come back for what's called a green sheet appointment. This is where we do a fact finder. And what we do is find you the money. Okay. This is where we structure and design a plan for you and give you the who, what, where, when, and how. Right. So the green sheet appointment. Now, if we design a plan for you, that's financial planning. A financial planner would charge you $5,000. If we show you how to avoid taxes, whether it's a trust or backdoor Roth, that's at least worth $20,000 or more, because you're talking about how much you would have to pay in taxes. Showing you how to take a life insurance policy, convert it or transfer it, and show you how to make an IRA out of a life insurance policy, a tax-free retirement, that's worth at least $10,000. Direct phone access to me and my expertise, me and my team, my agents, that's worth at least $20,000. And we're probably downgrading that. The relationship is worth at least $55,000. What do we charge? 10 referrals. Who do you know that we should know? So, due on the second appointment, before we do the green sheet, before we show you the money, you have to bring us 10 good referrals. We require that you text my business card or text our business card to the person before we call them. So we will give you 7 days to reach out to these 10 people. If they say no, let us know that that person said no. If they say yes, fine. If they don't give you any response, that's not your business. Your business is to, you know, tell us who we can help. And then you have paid your broker fee and you have a personal relationship with me and my team. So that is the 1-800-757-4396, where you can text and book a call with me. That is the tiny URL. This is the scan code. You can put up your phone, and my Google Calendar will open up. Push a time for a 30-minute discovery call. We just get to know each other and see if it's a good idea to take the next step. And that is that. All right. So now, what time is it? It's 7 minutes after 8. We shut down at 8:15. So we have 3 to 5 minutes in the hot seat. So those of you who are on the Zoom call, now is your chance to pick my brain. So we're going to do a laser coaching. Raise your hand to be called on up into the spotlight. When you get up here, you're going to start with a statement. My question is, and then you're going to state your statement. A lot of times people grab the mic and they want to tell their story and they just want to make a comment, right? So this is for questions only. So when you open up your mic, start with a question. My question is, and then we will take your questions. All right. And let me end the slideshow and see if anybody's here. All right. So, Miss Maggie, do you have any questions? Feel free to unmute yourself, and I'm here to answer them for you.
Thank you for the opportunity. And you look lovely.
Thank you.
I don't have any questions at the moment. You answered the question I did have, and it was in reference to a trust.
Oh, okay.
And we'll talk about that some more.
Yes.
Yeah.
I guess Miss Maggie won't mind telling you she's my client. So, Miss Maggie, when you and I get together one-on-one, I will point you in the right direction so that you can get everything set up to be tax-free. That's the next step for you.
Absolutely.
So we get you tax-free, no matter how, we slice that cake. Sounds good. Brandon, did you have any questions for me? You driving? Yep, I saw Brandon was in his car out there. So I'll give you a few seconds. I don't know whether you're walking, eating, what you're doing there. All right, going once. Oh, there we go.
Hey,
How you doing?
I lost you there for a second.
Yeah.
I'm doing good.
You doing good?
Yeah, I was getting. I'm been home now
Okay.
for all the important parts. But
any questions?
The Rockefeller Trust. sounds the most risk free, I guess, to me
Mm-hmm.
because of the guaranteed money and the trust and
Mm-hmm.
something generational.
Mm-hmm.
But the buy-in starts at $250,000
No,
for
sir.
that.
No, sir. Um, so
That was
that's
just
going to be that's
okay.
the wealth management side. So first, you have to have your money in an annuity, and from the annuity, it goes into the trust, and the trust depends on what state you live in. We will point you to referral and tell you based on the green sheet, we will tell you how much your trust will cost so that you go into the law firm armed and dangerous and you cannot be gouged because if you're going blind, they may try to price you out of the market or, this and that. So we recommend that you have at least six figures in some type of retirement account before you go into the law firm, and we will point you to the law firm, right? And send you on your way. But must first be in an annuity. There's nothing else that works because it is a perpetual income that you're creating. Long after you're dead, this annuity is going to be paying someone. So a brokerage account loses money on the stock market. That's not a guarantee that that amount of money will be there. So there's no brokerage account that can take this. CDs,
Okay.
money market, nothing that doesn't have that guaranteed perpetual income. So first step, that's why that power move number two is to get the fixed index annuity because you get stock market gains so you can stay ahead of inflation and no losses so that it doesn't matter what happens to the S&P 500. You never lose a dime. So the wisdom says you put it into something that cannot be lost, but it's not a snail where it grows so low it is depreciated in value because it's growing so low. So the fixed index annuity from there, then it goes into the trust, then it becomes perpetual and tax free for you, and it becomes perpetual and tax free for whoever it is you're leaving it to, be it a charity, family member, children, whatever you're leaving that perpetual income to, it becomes that. Does that make sense?
Yes, thanks for clearing that up. That makes sense.
Yes, absolutely. Thank you. Any other questions?
No, that's it.
No? Good, good, good. All right. So, did you both learn something new?
Absolutely, I always do.
Beautiful. All
Yes,
right.
I learned something new.
Wonderful. My pleasure. Well, if you're in a position, Ms. Mag, I know you already have an appointment. If you would like to set an appointment with me, go to Rhema, and that's RHEMA financial coaching at gmail.com. And that is my email address. You can shoot me an email there. If you want to book an appointment or just read up more about me and the company, you can go to Rhema, RHEMA, Financial Solutions with an S.net. You can open up our website. It gives you the opportunity to book a phone call or book a 30-minute Zoom call. And that goes directly to my business cell phone. So the minute you book it, I will see it. And then we can take it from there. So I'm going to go down here and put this booking calendar on the screen. So don't go into the law firm and say, can I have a Rockefeller trust? Rockefeller, we use the name Rockefeller because that's how one of the ways they used it. But there are several different types of Rockefeller structures that the Rockefeller family used. One is with whole life insurance. So they put whole life insurance, and every time a Rockefeller is born, they have a relationship with a particular life insurance company where their trust buys a whole life policy on a Rockefeller who's born with the name Rockefeller, and the trust owns that whole life policy and is self-funding. So they have various different structures in the Rockefeller family in these trusts, but the one that creates retirement or passive cash flow income is the one that I am describing to you. All right. So it is, I would not do your homework before you just take this information, go run down the street and, think that you got it. You don't want to look, honestly, you just don't want to run to a law firm looking ridiculous, quite frankly. And then if you go into a law firm, we've called, and some of the people go, what? Huh? Oh, no, we don't do that. Right? I've even had estate planning law like, no, we don't do that. We focus on this. We focus on living trust. That's all we do. Wills and living trust. That's it. We don't go over into the wealth planning, the wealth management, because that's specifically wealth management zone. So don't feel like you have egg on your face if you go in there and they still don't know what to talk about. Okay, join our Facebook group. It's the 3-step challenge to become your own bank is the name of the Facebook group. Once we get 100 people in that group, we will be doing a 3-day challenge, and we will be taking each section and we will be doing a deep dive on various different be your own bank concepts. If you are a woman, join our women's group, and it's called the Ethnic Women's Financial Advisors Coaching Group. I'm sorry, I don't have this slide up. And where these are women of color, we are a minority in a minority, right? Minority women, women of color, and we have a support group where we will actually be doing something called Women, Wealth, and Worship, where we do workshops, podcasts, we promote each other's businesses and groups, speakers, conferences, and such. So if you're a woman of color and you are in financial services, jump on over to the Facebook group. All right. Listen, it was a pleasure being with you. Beloved, I speak the scripture over you. Beloved, I wish above all things that you prosper and be in good health as your soul grows. So personal development, associating with positive, good people, reading, growing in your financial literacy, and walking and practicing the principles of integrity, honesty, and strength. All right. So we release that over you and say good night, and we will see you next time. All right. Bye-bye.
Thank you.
Bye.
Thank you. Bye.